Have you noticed what's happening in Dallas right now? Home prices here have surged 38% since 2020, outpacing Miami, LA, even Sydney. Some investors are calling it the next big thing. Others, they're saying it's a bubble waiting to pop. So who's right? Hi, I'm Jonathan Blake. I've spent the last 15 years advising private clients from New York to London, and here's what I can tell you. Dallas is heating up in ways we haven't seen since Miami's breakout in 2015. Take a look at this chart showing median price growth over the past 5 years. Dallas versus Miami median price growth 2020 to 2025. Now, here's the kicker. With no state income tax, rising tech hubs, and rental yields hitting 6% in suburbs like Frisco, Dallas isn't just affordable. It's becoming a serious contender for long-term capital growth. But here's the question I'm asking my clients every day. Is this the smartest move for your portfolio in 2025, or a risky play dressed up as opportunity? Stick with me, because in this video, we'll break down exactly where Dallas stands today, what the data is really telling us, and how you can position yourself before this window closes. What's driving Dallas in 2025? Now, if you've been following the U.S. real estate market for a while, you've probably heard this before. Dallas is booming. But 2025 isn't just another growth year. It's a tipping point. I've had 3 separate calls just last week from clients in London and Melbourne asking, is Dallas really the next Miami? And honestly, the numbers are hard to ignore. Population growth is exploding. In 2024 alone, Dallas-Fort Worth welcomed over 152,000 new residents. That's more than the entire population of Cambridge, UK, added in a single year. And this isn't random migration, it's strategic relocation. Tesla, Oracle, and dozens of fintech companies are setting up massive operations here. That's driven an 11.2% job growth since 2020, and it's showing no signs of slowing. Take a look at this chart comparing job growth between Dallas and Miami since 2020. Job growth comparison, Dallas versus Miami, 2020 to 2025. Now, why does that matter to investors? Because jobs bring people, and people need homes. And while cities like Sydney and Toronto are grappling with housing shortages and red tape, Dallas offers affordability and space. Zillow's February 2025 forecast projects a 1.7% home value growth in Dallas through mid-2026. Some might say that's conservative, but compare it to Miami's 0.9%, and you start to see why investors are pivoting. Mortgage rates and property prices, crunching the numbers. All right, let's get into the numbers, because at the end of the day, this is what drives decisions. As of March 2025, Freddie Mac reports the average 30-year fixed mortgage rate at 6.65%. It's not cheap, I know, but relative affordability makes all the difference. Let me break it down. A $500,000 home in Dallas with 20% down means about $2,058 in monthly mortgage payments. Now compare that to Miami, where the median home price is $630,000, and you're looking at $2,580 per month, a $500 difference. That's $6,000 a year, and in places like London or Sydney, that difference can be double. Take a look at this side-by-side comparison. Monthly mortgage payments, Dallas versus Miami, 2025. But it gets more interesting when we talk about the luxury market. In 2024, Dallas saw a 28% surge in million-dollar home sales, according to the Texas Real Estate Research Center. I was chatting with Sarah Lynn, a property strategist who works with high-net-worth clients across New York and LA, and she put it bluntly. We're seeing buyers who were once fixated on Palm Beach or the Hamptons now scouting Highland Park and Frisco. Why? Because Dallas offers room to scale. In Frisco, a $1.2 million home not only gets you a new build with modern amenities, but also 5 to 6% rental yields, often with corporate tenants. You won't find that combo in Miami right now, where HOAs are skyrocketing and yields are tightening. And if you're wondering about price appreciation, check this out. From 2020 to 2025, Dallas has seen 38% growth in home values compared to Miami's 7%. Take a look at the data here. Home value growth, Dallas versus Miami, 2020 to 2025. Government policies, why Dallas makes sense. Now, I've worked with investors from Canada, the UK, and Australia. If there's one thing we all dread, it's government red tape and punitive taxes. Dallas? It's about as investor-friendly as it gets. There's no state income tax, no vacancy tax like Toronto's 3%, and no capital gains tax hikes like we've seen debated in Australia. I was on a panel last month with Mark Caldwell, an international tax advisor based in London. He said something that stuck with me. In Texas, your rental income doesn't just work harder, it stays in your pocket longer. Of course, there are headwinds. There's talk of Trump-era tariffs returning, which could increase construction costs by 0.6%, according to Newsweek. And GSE privatization might nudge interest rates higher. But here's the thing. Dallas is shrugging that off. The $1 billion data center boom and a build-to-rent surge are creating resilience. Unlike Toronto or London, where policy shifts can stall entire sectors, Dallas keeps moving. Take a look at this policy environment breakdown. Real estate policy comparison, Texas versus UK, Canada, Australia, 2025. Opportunities and risks, playing the smart game. Let's talk about opportunities first, because they're compelling. Opportunities in Dallas. Growth potential. Zillow projects 1.7% appreciation, but luxury segments are running hotter, 5 to 7% annual gains in places like Collin County. Rental yields. Suburbs such as Frisco and McKinney are offering 5 to 6% rental yields, outperforming many major U.S. cities. Corporate relocations. Big names like Tesla, JP Morgan, and Goldman Sachs are moving regional hubs here, creating demand for high-end rentals. I have a client from Sydney who moved $2 million from a Melbourne commercial portfolio into Dallas residential properties in late 2023. By the first quarter of 2025, he'd already locked in $130,000 in rental income and 18% capital appreciation. Risks in Dallas. Interest rate sensitivity. A 0.5% rate increase can cut purchasing power by about 5%, slowing speculative buying. Climate concerns. Texas heat waves are no joke. Insurance premiums and energy costs are rising, something to keep on your radar. Here's a quick visual on those risks versus rewards. Dallas Real Estate Opportunities and Risks 2025. I always tell clients, if you're coming from London or Toronto, Dallas feels wide open. But that doesn't mean it's without challenges. You need a strategy. This isn't a game of chance. Case study. Alex's $1.5 million play that paid off. Let me share a real story because numbers on a spreadsheet only go so far. Alex, a private equity executive from New York, called me in early 2023. He was debating between adding to his Miami holdings or exploring something new. I told him, you might want to look at Sherman, north of Dallas. Tesla's building out, and the data center projects are real. By mid-2023, he put $1.2 million into a new build there. By 2025, it's valued at $1.5 million. A 25% appreciation in less than 2 years. His rent roll, $4,000 a month, a solid 5% yield, and he's got a waiting list of tenants, mostly executives working on nearby tech campuses. Meanwhile, one of his colleagues dropped $1.8 million on a Miami condo. Today, it's worth $1.9 million with $3,500 in monthly rent. But once you factor in 1,200 HOA fees, insurance, and rising maintenance costs, he's barely breaking even. This isn't about luck. It's about positioning. Take a look at their side-by-side outcomes. Investment performance comparison, Dallas versus Miami luxury properties 2023 to 2025. Actionable strategies you can use in 2025. If you're watching this and wondering how to get in, here's what I'm telling my clients. Focus on Frisco and McKinney. These are fast-growing areas with strong rental demand. Look for properties in the $600,000 range where rental yields of 5 to 6% are achievable. Leverage interest rates. Now, rates are high, yes, but buying points can reduce your rate by 0.5%, saving $100 per month per $200,000 borrowed. It adds up quickly on $1 million loan. Diversify internationally, but prioritize Dallas for growth. Many of my UK clients are splitting portfolios, $500,000 in Dallas, $500,000 in Melbourne, or Toronto for stability. But guess where they're seeing the best appreciation? Dallas. Work with local experts. Dallas may be wide open, but success hinges on who you know. Partner with agents and property managers who know the high-growth corridors. Dallas or wait? What's your next move? So, let's step back for a second. We've covered a lot here, and if you're still with me, you're clearly serious about making smart investment moves. Here are the 5 key takeaways you need to keep in mind. Dallas is outpacing Miami in growth, with 38% appreciation since 2020, while keeping entry points affordable. Rental yields are strong, especially in Frisco and McKinney, with 5 to 6% returns, outperforming many major cities. The regulatory environment in Texas is investor-friendly, with no state income tax or vacancy tax, giving you more control over your cash flow. Corporate relocations and tech expansion are fueling long-term demand, creating an ecosystem that's attracting both capital and talent. And the case studies, like Alex's 25% return on a Sherman property, show it's not just theory. This is happening right now. If you've been sitting on the sidelines waiting for the right time, I'll be blunt. This might be it. I've seen too many investors hesitate and miss their window. Dallas in 2025 feels like Miami in 2015. The difference? You're getting the inside track before the prices explode. Take a look at this side-by-side forecast of potential appreciation over the next 3 years. Projected home value growth. Dallas versus Miami, 2025 to 2028. And let's be honest, by the time this becomes mainstream news, the best opportunities will already be off the table. What should you do next? Here's what I recommend. If you're a high-net-worth investor looking to diversify beyond saturated markets like London or Toronto, Dallas deserves a deep dive. Start by focusing on Frisco, McKinney, and Sherman, areas with the strongest fundamentals today. Lock in rates now. Even at 6.65%, you can structure deals that deliver positive cash flow and capital growth. If you're wondering where to start, or you want to talk through strategy tailored to your portfolio, feel free to reach out in the comments. I'm always checking in, and I love hearing where fellow investors are looking next. And if you've already invested in Dallas, drop a comment and let me know what's been your experience so far. Are you seeing the same growth numbers I am? Or do you have a different take? Let's get that conversation going. Now, if you found value in this breakdown, and you want more deep dive insights like this, you know what to do. Hit that like button, subscribe, and turn on notifications. Because we're covering more cities, more data, and more strategies that could help you stay ahead of the curve. And trust me, you don't want to be the one watching from the sidelines when the next wave of gains comes rolling in. This is EstateScope, your edge in real estate investing, and I'll see you in the next video.